22,300 inside, guys.
And oil is down in trade.
Yeah,
so
what a turnaround from last week, Wednesday.
Yeah, couldn't complain, really.
Yeah. So the global cues are looking good. I think the mood is sort of lifted on, as far as Indian markets are concerned. And the biggest factor that we've been talking about and highlighting all day yesterday, pollsters are now coming in and underlining it, that voter turnout's not as less as was initially expected after the final data has come in. And that's been a sigh of relief. The election sort of nervousness receding. FIs are continuing to sell, but remember that that's left domestic investors undaunted. The other big factor to watch out, of course, will be the MSCI rejig, the quarterly rejig, and we'll have all of those details for you. But let me just begin with the global setup very quickly and what you should look out for. The rally completely resumed on Wall Street, after a bit of a pause yesterday, and that's ahead of key inflation data, CPI data that is expected to come in. One set of data which has come in is the Producers Price Index. So the April CPI, just to come back to that, is expected to rise 0.4% month on month versus 0.3% last month. The PPI, which has come in, think of it as the wholesale price index, rose 0.5% in April, tad higher than estimates of 0.3%. But do see that the markets have not reacted in any way too negatively to it. There is an important comment by Mr. Powell that's come in on this, and that's one to note. And I think what he's saying is very telling. He's saying have patience, let the restrictive policy do its work. He did go on to reiterate that he doesn't see any hikes coming in, but the higher for longer narrative sort of gets underlined once more from what Powell has said. But if you look at the 10-year and if you look at the bond market, it's not like it's reacted too negatively to these kind of statements. The 10-year at 4.44. So benign and not too uncomfortable. Just one more story that struck me and I found interesting is the war of the AIs and that coming in. So a day after OpenAI launched its ChatGPT 4o, you had Google launch its Gemini 1.5 Pro. So the war of AIs is something that's going to dominate Wall Street in terms of mind space, but then this is something that's going to dominate our lives over the next few years as well. So I thought that was an interesting aside. Crude, as Niraj has said, continues to be benign because of those, wholesale numbers, the PPI being slightly higher than estimated, and Powell's statements has kept crude benign, nothing great happening there as well. In fact, you have Asia pretty positive in terms of how it's opened, at least how it opened now. It's bit mixed right now, but the cues aren't bad, I would say. Let me just quickly pull up implied Nifty for you and see what's happening there. And you're seeing another start in the green. Nothing massive, but 63 points up on the Nifty is not too bad after the kind of rocky start we had. Just wanted to put the focus for a second on fund flows to put that into perspective. So yes, you had another day of selling as far as FIs are concerned. But if you look at the complete figure in May so far, and halfway mark for the month actually, it's the 15th of May, 28,683 crores in FII sales already so far. So FIs are continuing to do what they do, whether that turns after June 4th or not, we'll have to wait and see. But as far as Dalal Street is concerned, I mean, the line we're running is what's spooking traders on Dalal Street. I would say that's kind of receded, to be honest. The spook factor has definitely come down. The VIX was also, on the lower side yesterday. And let's pull up the VIX since we've mentioned that. I think that tide is kind of turning, and it was about 2% down. So I would say that the mood has actually changed.
In fact, the VIX has not shot past 20, it's actually receded in trade yesterday as well. So the mood has certainly changed in the last 24 to 36, actually 48 hours, if you will. Frankly, if you look at the day yesterday, and that's the trade setup really, you could pretty much mimic. If we mimic what we did yesterday, it'll be a great day because it was a strong volume day, which ended at the day's highs, which actually provides comfort to any bull which could have taken long positions in trade yesterday. By the way, just the nature of the move yesterday, old economy at its best. Adani Enterprises top gainer, Reliance Industries 1.5%. almost all metal stocks, Hindalco, Tata Steel, JSW Steel, SAIL, Nalco, all of them doing really well in trade. So metals, old economy came to the fore. You had PSUs like Coal India and some ONGC and the others. So it was essentially an old economy driven rally in trade yesterday, and which is actually a good comforting sign, because those are the stocks that haven't participated almost at all, right? While the market has done what it has done. So that was a good thing. Samina was mentioning call AIs in trade yesterday. Just look at the open interest that says OI. Sorry, AI just rung in my mind. But look at the open interest.
Oh, AI will be determining OIs soon, if not already. So.
Maybe at some point of time. Hopefully not in the next 5 years. But yeah, the call OIs, 22,500, 22,600 levels just implies that for the time being, in the very near term, there is very little large resistance in the immediate 150, 200 points. I mean, there always will be resistance at every single 100-point move, but the largest OI at 22,500, 600 implies that there is still some way to go before there is some major resistance, I would reckon. Still in the fear gauge, really, so still some time. And healthcare suffered significant profit booking yesterday, which was a bit of a surprise to a lot of people. Still people constructive there, but you got to honor the tape as it comes. While everybody was constructive yesterday, that one sector that took a bit of a beating, and maybe because the participants on the upside were a completely different set of guys, and therefore tech, healthcare, etc., all of them came down in trade today. So that was a bit of a bummer. And guys, I don't know if you have Samina has something to add, but I just thought this added ammo of $2 billion worth of MSCI flows coming in is also a bit of a positive news.
Yeah.
Indeed. In fact, I think Nuvama has put out a report where in March 2020, India's presence on the EM index stood at 8%. This is during COVID, just during the COVID phase. Today, 4 years
17.
on, that's 18%.
18, okay.
So we've done a big jump, and they're expecting by the first quarter of FY25, we should be at 20%. So big inflows. If our addition to the JPM bond index wasn't enough to cheer the currency or the rupee for that matter, I think this is another good news on the radar.
Interesting statements from the Nuvama boss actually at that conference yesterday, talking about India. I just want to pull up all of that MSCI data for a second because we referred to it, but we'll pull up those data points as well for you. So 13 Indian stocks have been added to the Global Standard Index under the quarterly review in May. JSW Energy, Can Bank, Indus Tower have been added under the large cap segment. Mankind Pharma, Bosch, NHPC, Solar Industries, Torrent, Thermax, Jindal, Stainless, and Sundaram Finance in the mid cap index. Phoenix Mills and PB Fintech have been upgraded to mid cap from small cap. Look out for some action there today on perhaps on the stock prices. Indus Towers, Mankind, NHPC, Solar, Torrent Power, NMDC and Sundaram have been added to the domestic indices. Berger Paints might see a bit of a downside. It's been removed from the emerging market index, and Hutco, IGL, Wari and Paytm have been added to the MSCI EM small cap index. So.
But for IGL and Paytm, it's a bit of a bump because they've been bumped lower. So that is one thing.
That would be a downside.
Yeah. And
but why would that be a downside? Because passive flows will still flow into the MSCI small cap index, right?
The mid cap index had larger flows, and therefore, if these are moved down from mid cap to small cap, just the typical addition to the small caps will be.
I think it's great news for Indus Towers.
Yeah.
I mean, look at that. The stock is already up 70% year to date, and this addition is going to ensure that it draws quite a considerable amount of inflows from FIs.
Yeah, but and just the piece one, that overall $2 billion worth of flows. But if you look at from all of these additions, there are 5 stocks which see over $200 million worth of inflows, right? Which is PB Fintech,
Indus,
Sundaram, Phoenix, NHPC and Indus. So of all the notable additions, these 5 are the ones which will see the largest inflow. Yes, the relative to the ADV, maybe for NHPC it's not a big thing because anyways the volumes are so high that over $200 million of flows doesn't do as much impact. But for an Indus Tower, for a Phoenix Mills and PB Fintech, it's a pretty strong one. And PB Fintech and Sundaram, the highest quantum of inflows coming in, $243 million and $238 million, if I'm not wrong, probable inflows. So that is really cool. And yeah, for Berger, IGL and Paytm,
Not too great. But also there's
283 million, that's the outflow number that you're expecting.
That they will be seeing.
On back of exclusion.
So ITC, Zomato, Vedanta, Macrotech and Tata Steel have also seen top weight increases in MSCI index, the large cap index. So you might see some move there. So I think that's one big factor to watch out, of course, and so many towards the tail end of the result season, so many numbers also out yesterday.
Just to very quickly add to that, on 31st May, and this is another article put out, where Kotak Mahindra Bank is expected to witness a potential doubling of its weightage from 1.38 to 2.68% of the MSCI Global Standard Index. So Kotak's had it rough for the last couple of days, but this will be interesting to see what it could do, potentially resulting in inflows of about $800 million. So May 31st is when you want to see when this potential change really comes through. Also, as part of the reshuffling exercise, we've already highlighted a few more, but the likes of Max Healthcare and Hindustan Aeronautics may be included. This is, of course, all that we are quoting is from the Nuvama report that was released yesterday. That's on the MSCI rejig. Niraj indicated about the markets. A quick word on Bank Nifty, because you've got the weekly option expiry. Bank Nifty PCR now stands at 0.78. Which is today as Bank Nifty weekly expiry takes place. Option data here is suggesting that the highest OI continues to remain at levels of 48,000 on the call side. And puts activity seems to be at 47,000. So very obviously indicating that 48,000 is where you're going to see serious amount of resistance coming in. But expectations are that the two-day rally on Bank Nifty may actually continue into today's day of trade, maybe a little more volatile than usual, largely on back of the weekly expiry. So that's what the markets are. Implied Nifty, like we've said, is indicating pretty happy start this morning. A gap up is what we're eyeing. 22,300 is in sight from the look of it. Stocks, and there'll be lots that we'll be reacting to. Bharti, quarter on quarter, year on year. Let's take a look at how those numbers have been. Revenue was up about 4.4% on Bharti, so largely flat on the revenue front. What we've seen is that net profit is come down substantially. The number looks a little disappointing, but it's largely on back of an exceptional loss where there was a devaluation of the African currency that has led to the profits being hit. The core business, the operational business, though, is looking pretty good for Bharti Airtel. EBITDA is up about 4.2%. They've been talking about operational efficiency for the last few quarters, and that's playing out quite well. They've also said that in terms of expansion, capex from FY25 will ease out as the capex is already on 5G is already largely concluded. What we are expecting is that a tariff hike is what would sort of boost these numbers for Bharti Airtel, which largely is expected post-elections. But net core business, those numbers look good, even though when you look at it on the face of it, they look slightly more disappointing. But that's because of that exceptional loss item, which was to the tune of 2,450 crores. So keep this one on. They've also doubled down on the dividend payout from 4 rupees last year to about 8 rupees per share this year. Well, that's Bharti for you. Shree Cement, outright beat on every parameter. I mean, what a set of numbers coming in from Shree Cement. Revenues were up 7%. Net profit was up 21%. EBITDA has seen a pretty big jump of 59%. Board has declared a dividend too. So all in all, it's a great quarter. Margins have expanded beautifully, 26.2 versus 17.4. And the outlook is also looking fairly promising. The stock has done well. Expectations are the rally could, or very likely will continue into trade this morning as well. Well, a third I want to add is Oberoi Realty. Again, very impressive numbers coming from their stable as well. We've had a mixed bag. You've seen some that have reported well, but Oberoi has stood out for me. 2x growth in EBITDA, net profit is up 65%. Revenues have done well. They don't seem to be hit by any increase in raw material costs. Margins are up substantially. It'd be interesting to see what has led to that kind of margin expansion, but no brokerage is commenting on it just yet. Outright beat on Oberoi Realty as well. The stock was up 2.5%, but a big gap up this morning on Oberoi and Shree Cement cannot be ruled out.
Yeah, absolutely.
Shree Cement was terrific, right?
Yeah.
I mean, the best EBITDA per ton
Record
yet
levels.
again.
Yeah.
It's just crazy what this company manages to do. Wherein most of the other cement pack, ACC did really well. Some of the others haven't, but Shree Cement just outright splendid performance.
Yeah.
And you
quite
know,
amazing.
Niraj, on the charts as well, this one's actually looking good. So I do remember yesterday on the F&O show, our analyst had a very constructive long trade on Shree Cement and takes guts and bravery to put out a long trade technically ahead of earnings, but I guess it's all going to come together for them. And even Oberoi, 60% expansion to margins. I don't even know how and what are they doing so correct.
Hopefully their pre-sales were okay, because that's the one factor everyone looks like.
No,
and DLF seemed fine on the face of it, but their Q4 sort of lineup was
There's another sell call on DLF on that note this morning, which we will highlight in the next few minutes.
So, I think the other factor that has been positive and actually a bit of a turnaround story for the space, and I'm going to just start with Colgate-Palmolive, because the whole conversation has moved to a rural revival. And remember, this was something which was all talk for a while. You're beginning to see the signs of it in numbers. So, so Colgate-Palmolive is a bit above street expectations, I would say. Revenue growth has been steady, up 10%, EBITDA up 18%, beat on all of those factors. EBITDA margins have grown to 35.7% and net profit up 20%. Their rural market continues to show sign of recovery. There's a strong momentum in the toothpaste business, of course, most important for them. The fact that a branded player is seeing that kind of traction augurs well in the overall picture as well. Gross margins have been good and overall expenses have been kept in check. Just take you through the Nuvama note on it. They've retained a buy with a target price of 2,910, not a massive upside, but they do say that the Q4 results are ahead of estimates and strong domestic growth of 10% is led by toothpaste. The big line for me is that rural market has displayed positive signs of demand recovery, outperforming urban, and that you're seeing again and again in this space being reiterated in terms of hard numbers. So more on that from a Colgate. Siemens also a good set of numbers. This is also going to maybe please the street. Net profit has nearly doubled on higher operating profit and margins. Revenues rose 18.4%. Net profit rose 70%. There was a slowdown in ordering in industrial automation segment on account of normalization of demand, though. Nuvama has set a buy with an upside of 15% because your PAT has also been beaten. The consensus has been beaten. EBITDA margin expansion has been good. The order inflows have fallen, but that's not too much of a worry, at least as far as Nuvama is concerned. So you might see a good uptick on Siemens as well. You want to comment on that?
No, just one small thing. So it's great. It's not an ABB. Everybody thought that because Siemens, remember the day ABB went up about 8%. It's done well, but as you said, Tamannna, not quite an ABB because one, on the PAT front, there are some real estate sales which have added to one-off, so that's a problem. And as you said, the other piece, order inflows 9% down because there's some deferment of large orders. So while ABB's commentary was all rah-rah about how everything is falling in the right places, maybe some chinks in the armor, and maybe because it's run up a bit already, it'll be interesting to see what happens.
You can't say it's been a bad quarter.
It's a great quarter, most certainly. Just that.
In terms of whether now there would be a sell after the run-up is what we'll have to wait and see. Radico Khaitan was the other one. Good numbers. Results were largely in line. If you see the Q-on-Q number, you might see a bit of a dip on the net profit, but year-on-year, it's up 26.4%. Actually, that quarterly performance might be the only fly in the ointment. EBITDA is up 55%. Revenue up 15.4%. I mean, for the entire space, actually, it's been a good year and a good quarter. So Radico Khaitan is, part of that entire pack, and the numbers have been decent.
Yeah, just that other small addition on Siemens that they have done a split or demerger of the energy business.
Yeah.
And the ratio is 1:1. I think for a lot of people there will be a sigh of relief because we've seen some of the companies in the past, the ratios not necessarily have been always on ball. In this case, because it's 1:1, there's no big change out there. Maybe the street might believe that at some point of time when this list, it adds to the SOTP valuation or no. So that could be interesting from a Siemens perspective too. So, I mean, largely, those are the set of stocks that you really want to watch out for, and the main ones in the session today. Non-results, I thought just start off with that because Cipla could be an interesting one. The stock was the top loser yesterday. and we were thinking what could be the reason. Well, now we know founders are seeking to sell about 2.53% stake in the company. The interesting piece is the stock has ended exactly at the top end of the range at which the sale is being done. So the range at which Cipla founders are looking to sell the stake is 1289 to 1357. So the stock has ended exactly at that same range. Watch out for Cipla in the session today. May see a bit of a weakness, never know, depending on what's the kind of appetite for Cipla. And then while we've spoken of all the good numbers, there are a couple of weak numbers. One of them is Apollo Tyres. Revenues flattish, 6258, lower than the estimate of 6427 crores. EBITDA margin at 16.4% versus 16%, but the estimate was 17.6%, so a bit of a pain there. And the PAT down 14% at 354 crores. The Bloomberg estimate was 457 crores. So clearly, a bit of a weakness for Apollo Tyres. Watch out for this one. And Archean Chemicals. Well, sometimes this is what happens to some commodity chemical companies. Archean has suffered from that this quarter. Revenues down 25% at 284. The estimate was 349. Margins at 30%. Versus 50%. In the estimate was 35%, so estimate was weak. This is even weaker than the worst estimate. And PAT down 57% at 58 crores. The estimates were 84 crores. So this one too could see a bit of a stick in the session today.
Just a quick one on Archean. Bromine prices have corrected globally this quarter. So that is a universal phenomenon, very little to do with the company itself. But,
but still.
Can't take away that those valuations, if you're somebody who's betting on bromine, I think those valuations make it look compelling, if anything, right? 20 times PE is actually a good buy if bromine is the big bet that you have. But yeah, universally those prices are lower. There is an expectation that that could be coming up on the front. So first quarter FY25 may potentially see some relief. For now, though, the stock will be on the sell side.
Yeah.
Got a couple of, you've got two listings which Tamannna will talk about, but I just want to quickly mention GoDigi. That opens, remember this is a Virat Kohli promoted, and Sajid talked about this and he's got a smile on his face, listing that will be hitting the market soon. GoDigit General Insurance has raised a significant amount of money from anchor investors. They will be hitting the primary market to look to raise 2,600 crores. The issue does open today. The IPO is open for subscription today, which is 15th May, and closes on 17th May. It has a little bit of fanfare on back of the celebrity quotient making GoDigit sound slightly fun, I guess. Anushka Sharma, Virat Kohli make it sound a little less boring.
So I have a little contrarian view. If you are going to endorse everything all the time, I don't know how much value it will still have left. I
think they have invested in it and made a good,
that is true.
Good return.
I saw Sajid's
post. So did I.
And Sajid's post.
So they've put the money where their words are. So they've had money. They're not promoted it for no reason.
You have more faith in Sajid's vote of confidence than Virat Kohli.
No, but Virat Kohli made
then
money.
Mine for sure.
No, but why do you say that? Virat Kohli has made money on it.
Yeah.
Sajid is not too constructive on GoDigit.
Yeah. We'll go to him on the editor's
we'll ask him.
So no, just a couple of things before I get to the two listing today, because I thought these were interesting brokerage takes as well. And quick mention, Devyani International was one that I want to talk about. While KFC brand is stable, Pizza Hut is not doing too well. Their margins are lowest reported since the IPO. Nuvama has kept its buy but cut its target to 212 rupees. Could be a 35% downside. They have tied up with PVR, but not too much excitement on that. It just does give early access and cross promotion. I don't know. First, someone has to go to the theatres, then they have to buy KFC and Pizza Hut. I don't know how that's going to help.
The theatres are not doing well either. PVR Inox numbers are fairly disappointing.
They were quite disappointing, actually. Quite a few notes on that as well. MK on Devyani also has maintained reduced with the target price. So that's one to look out for. Shree Cement was great. JK Cement not so much. So not everything in the cement pack is necessarily doing well. City has maintained a sell and cut its target price to 3550. In terms of the new listing, TBO Tech. Now that's where you might see an interesting listing, because it was now subscribed 86 times on its third and final day. And it's basically an aggregator which then services your OTAs, so puts together all the flights and hotels, etc., which then, Yatra, etc., will take up. So TBO Tech is one listing to watch out for. Aadhar Housing Finance will also debut today, issue price of 315 apiece, and was subscribed 25 times. So this year has been okay, tepid, I would say, for the primary market, but we'll see how these two listings do today.
In fact, the TBO Tech in the grey market is at a 40% premium. So expectations are a 40 to 50% gap up is great listing.
So that is
and
one
they've
to
been
look out for.
fortunate because the market sentiment is not as bad. So if they prepone this by a day or two, I don't think it will be as good.
But it's a roll of the dice.
Yeah, it is roll of the dice. They're just all luck. But yeah, that's... talking about Devyani, I think PVR also very disappointing numbers. So no one's going to cinemas. So forget eating KFC. You're not even going out. And I think Amazon Prime is to blame for this, and Netflix, because you're watching so much more at home.
Sorry, please
go on.
No, I just thought we'll go to editor's cut.
Yeah, they've posted a loss of 130 crores. Revenues came in at 1256. EBITDA is lower, and margins have also remained flat. But on the top line and bottom line, there's been a little bit of a hit.
Yeah, so the numbers as they came yesterday, the stock saw a bit of a fall. Brokerages today, not constructive, maybe some more out there. One guy who goes to movie theaters is Sajid, and Alex, I believe he joins you today to speak about movies or something else?
No, something else entirely. You guys have been speaking about Virat Kohli, and as everybody who follows cricket knows, Virat Kohli is most famous for his cover drive, but the other thing that he's famous for is his fantastic defense. And we are going to talk about the defense sector today. And Sajid, we were wondering yesterday in the newsroom because we were seeing the likes of Mazgon Shipbuilders, Cochin Shipyards, Garden Reach Shipbuilders run up tremendously. And we were thinking just a few weeks back, how much further would these run? The fact is that I think a lot of people have been focusing on the indigenization story, but the export story is equally important to focus on.
That's true. If you look at how exports have moved in the last 10 years, it's a story in itself. That's primarily because in the last 10 years, we have exported nearly $88,010 billion of exports, which has happened. Of that, 42% have happened in the last 2 years. And that tailwind is coming from the global conflicts which is coming in. Now, you have to put it in perspective. At one point in time, we didn't have enough capacities. The capacities have been built in the last 10 to 15 years, and private sector and public sector both are on good capacities today. But they were not markets for them. We were more dependent on imports. The government has gone for indigenization, and as a result of which, for FY24, 75% of the procurement, defense procurement, was given to domestic players, which includes DPSUs and private sector, which is there. So there is an emphasis to increase and utilize the capacities which have been built over the last 10 years so that you can build more capacities. At the same time, emphasis has been made on manufacturing which can be exported. And that's what we are seeing, 88,000 crores of coming. So it's a jump of 32%. Now, which are the countries?
No, let me get this straight. So we're talking about the Ukraine conflict, which is the primary conflict that began a couple of years back.
2 years back.
2 years back, which incidentally is when Indian companies started exporting more. But are we saying that Ukraine is the buyer, or no? Is it other countries that are moving?
So when Ukraine-Russia war happened, a lot of defense procurement was diverted towards that war, because you had the West versus Russia, which was coming into play in Ukraine war. And so what happened was there was a huge void which was created for other developing countries and emerging countries for their defense procurement.
In Africa,
in East Europe, Latin America, or in Asia, where it is there, and that's where the Indian defense companies have been able to do it. The government has been able to push these companies to help. Remember, you cannot export any defense equipment from India unless the government approves it. So there is an export authorization that comes in for every sale that happens.
Which are the type of defense equipment that have been going as exports to these countries?
Mostly it's land system, which basically means guns and ammunition which are there, because these are the things which are required in the emerging markets or the underdeveloped markets which are there. So they're supplying to them, and many of the companies in India are are able to help them. You will not see any of the private sector talking about it or a defense sector talking about it. But at the same time, you will if you speak to them in private, they said you were getting a lot of orders from there for these markets, and that's what is driving. So if you look at 20,000 plus crores was exported in FY24 alone as compared to 15,000. So nearly 42% coming in because of the tailwind which was there of political.
So the question that I have is twofold. One, which are the companies that are primarily catering to these exports and have seen a shift in their revenue mix towards exports? And then I'll come to the second point.
A lot of these companies are private sector.
Yes.
Or, are companies which are under a flagship companies and their subsidiaries, because defense as a category for them has not emerged as a flagship company, because they've been building capacities but there was no orders. Now that is happening. It's now they are emerging in it.
Like so L&T.
L&T is one, because for the longest time we have told we've been telling L&T, or analysts have been talking about how a lot of capital is stuck in defense infra which they have created, and but now it is getting utilized. So even if you look at the committee which came out of Q4, new areas include defense as one of the areas where they are going to get more revenues going forward. Then you have the Bharat Forge group which is there, Kalyani group which is there. It's the defense is not a listed part of it, but the orders come to Bharat Forge, so that's how it is there. You have the Mahindra Defense which is there. You have the Adani Defense which is part of Adani Enterprises.
Guns and artillery, right?
Guns, artilleries. You have drones which are now there. So the warfare has also changed in the last 2 years, right?
Yeah, from infantry
led to more of technology, drones, long distance missiles. What we saw happening in Israel recently, Iran attacking across Israel, all those, and then defense systems which is there.
So, and the last question that I had is that this void that you spoke about is because US supplies or traditional defense manufacturer supplies are going to the likes of Ukraine, and so therefore so-called third world countries, developing countries, are being forced to look outside of the regular suppliers. They're coming to India.
So it's a market expansion for the Indian companies.
Fair, but assuming that the conflict ends at some point, will there be a shift once again, and could there be a...
It's not going to be that way, right? In the sense, look at oil. Oil was the biggest issue when the Ukraine happened. Yeah. People went and, found additional sources, and now they are ensuring that there is a backup. Sure. In case of conflicts, they are not so dependent on Russian crude or or the gas which is coming in there. So that's the same principle. Diversification is what is happening, and that's what is also helping Indian companies. So even Indian defense companies are at it, BEL or Cochin shipyard, or the shipyard, all the three shipyards, Cochin, Garden Reach and Mazgaon, all of them have a good amount of exports order which is there. It may not be warfare ships or something, but they're doing good work of building ships which are new technology, hydrogen fuels ships and others.
And for coast guards and all of that.
Yes, exactly. So one thing is very clear, right? You have those Houthis and those kind of thing which is coming in, and you need to have good naval fleet which is coming in. So the shipyards have enough order, which is coming in because of these localized conflicts which are coming in, or attacks which are coming on sovereign ships or flagships which are there. So you are getting a good amount number of queries and orders coming in for those kind of ships. Absolutely. It may not be a warship kind of thing, but warships are also being built. India itself has a big budget for that.
So fantastic. So while we've been focusing on indigenization and the increased spending that is going towards private companies for Indian defense, another aspect to focus on is certainly the export angle. And therefore, what is the primary determinant of whether or not Indian companies can capitalize on this increased demand? It is going to be capacity and the ability to build capacity. In fact, that is part of what the Defense Secretary was speaking about at a recent event. And here's what he had to say.
Again, time has to come, give a free hand to enterprise, private enterprise, where we encourage the private sector, the industry, to acquire those animal instinct to contribute to the nation's growth. In this context, MDL has a major role. You were a private company initially. You have become public sector company. Now again, you have to work with the private sector in a major fashion, build a consortium of shipbuilders within the country to meet the needs of our own Navy and our commercial entities, and also contribute to our friendly countries, both to the west and to the east of our country. I would like to draw your attention to the indigenization part, most importantly. India is such a country that its needs cannot be met by the industries of other countries. As a nation of 130 crore people, it is impossible for us to depend on others for constant, consistent supplies of anything, whether it's the food grains or the most modern equipment. We have to many times manufacture for ourselves. With a vast coastline, spanning several thousands of kilometers and several island chains, we need to develop the capacity within India. For that, we need several technologies which we do not have, and we don't have any visibility of their being supplied from our friends from abroad. So indigenization programs like IDEX, the Technology Development Fund, and the PILs, Production Linked Incentive Schemes of Industries Ministry, are encouraging the innovators, the industries, to come up with the domestic solutions.
Welcome. This is India Market Open, and we are taking a look at the futures and options space. Of course, don't forget that 3 weeks down the line, we have the outcome of the general elections, which means that this is also your election trade tracker. Now, let's start by taking a look at how Indian markets have fared. And over the last couple of days, we have actually seen a little bit of an improvement as far as the sentiment's concerned, considering a slight up move as far as benchmarks go. The Nifty moving above the mark of 22,200, and even as we see a sharp decline of around 7.7% in the futures open interest, indicating a lot of those shorts made earlier have now been covered. Well, as far as the Bank Nifty goes, a little bit of more long traction coming in. A lot of the strength, being given by a whole host of public sector banks, which is why this particular index was also up by about 0.25% and nearly added about 2.6% in open interest when it comes to its futures. But it's going to be about the options market, isn't it? Now, I'm going to start off with the Nifty. The traction as far as yesterday's GF was concerned was all over the place, but we did see a little bit more writing in puts around the 22,200 mark. That's particular strike, of course, because the Nifty also moved above that and closed higher than that. But of course, a lot of that could change. Let's take a look at the overall option open interest. Now, we do have a significant amount of distribution around 22,500 and 22,600 call strikes. On the lower end, we continue to keep an eye on 22,000 as the one which has maximum put open interest. So this is a rough range within which we can perhaps work with as far as the Nifty is concerned as we move into tomorrow's weekly options expiry. But it's not just going to be about this week, isn't it? It's going to be about the 6th of June expiry as well. So from here on, every day, we're also going to give you about how positions are in fact developing when it comes to the 6th June weekly options expiry. At the moment, all we can make out is that there is a substantial amount of open interest in both calls and puts at two strikes, the 22,500 mark, and on the lower end, we do have a lot of accumulation around the 22,000 mark. The question really is whether or not these are in fact being bought into by smart money. The premiums are substantially high, as one might expect, considering it is going to be an event-heavy week. Of course, the 4th of June is where we have the outcome of the elections, and 2 days later we have this specific expiry. So it's going to be a very, very important weekly options expiry as we move in to that particular event. Now let's talk about the Bank Nifty. Today, of course, is the weekly Bank Nifty options expiry. At the moment, looking at a substantial amount of writing around the 48,000 call and keeping an eye on the 47,500 put as well, where we do have a little bit more going on. Again, premiums are relatively expanded at the moment, considering the kind of volatile times that we've been going through. Finally, coming down to stocks, let's talk about all those which are in focus. Of course, Shree Cement will react to earnings today. We saw longs in Oberoi Realty and Marico. Marico, even though it was flattish largely, and shorts for something like PVR, Inox, and Berger Paints. And in terms of stocks, we saw unwinding, short covering for L&T, HDFC, and HDFC AMC and Hindustan Copper. This morning, we also have a relatively positive note on L&T from Jefferies. So keep an eye on that one as well. But the question really is that where do we go from here with all the data that we have and the kind of positions that are being built over the course of the next few weeks? Well, let's get in an expert opinion. We have Milan Vaishnav of, Gemstone Equity, who's joining us on the show. Milan, good morning. Thank you for joining in. What's the way forward when it comes to the Nifty?
Hi, a very good morning to all of you. I have a couple of things in mind as we approach the markets. First of all, we should not forget that over the past couple of weeks, in fact 4 to 5 weeks, the India VIX has literally doubled, in fact more than doubled, from the low of 9.85 or 9.8 somewhere. We have seen it testing the 21 level. So markets are preparing for some very sharp volatility going ahead from here. And perhaps if we talk of smart money, then smart money knows something more than what a retail investor does at this point in time. So coming back to Nifty, what I feel that I'll answer this from a very short-term perspective of next 2 to 3 weeks' time. That Nifty has gradually brought its resistance lower to around 22,500. 22,775 continues to remain an intermediate top, and 22,500 is where the markets are expected to find resistance going ahead from here. I see both the things happening. Markets enjoying some mild technical pullbacks the way we are seeing it from last 1 or 2 days. And at the same point in time, the moment it goes near 22,400, 500 odd levels, I expect Nifty to face some selling pressure again. Now, speaking of the lower edge of the range, markets have a very important support zone between 22,000 and 22,100, because around 22,100, I'm just rounding off the figures for an easy reference, that around 22,100 we have got 20-week moving average, and around 22,000 we have 100 DMA. And this zone constitute a very important support zone. So we expect that a violation of 22,000 will invite incremental weakness for the markets. So long as it is above 22,000, expect it to stay between 22 and 22,500, and expecting some selling pressure once again near 22,500.
Okay. Based on that, what option structure are you deploying there, Milan?
I am once again going in with a short strangle. I'll be selling 23rd May expiry, 22,500 call, and would be selling 21,800 put of 23 May expiry. And I expect to realize 130 rupees in the premium as a part of risk management. I would exit the trade if Nifty goes above 22,500 or ends up violating 21,800.
Okay, well, selling a strangle here for the 23rd May expiry, and well, at the breach or reaching any of these strikes, that's where Milan is recommending an exit is as far as the strategy is concerned. But moving on, Milan, I believe you also have Lupin on your radar.
Yes, that is part of my overall view that we might be seeing some little risk-off setup in the markets going ahead. And I expect traditionally defensive space like IT, pharma, FMCG, etc. displaying far better relative strength than what they have been doing right now. So I would be going with Lupin. I expect Lupin to test 1,700 levels. So I would be buying May 1640 call and selling 1,700 call, and would be paying a net premium of around 19 rupees. So by that, I can expect a maximum profit potential of around 17,000 plus, and a maximum loss would be of around 8,200. So we are still enjoying a very good risk to reward ratio of around 1:2 here.
All right, well, there you have it. That's the view as far as Lupin is concerned. Milan, on that note, thank you for joining us and taking us through your views on the markets, and of course giving us that option structure on Lupin as well. And with that, it's over to you guys in the studio.
Right, thank you, Agam. That's of course the picture coming out in terms of the Nifty, Bank Nifty, the options expiry. Remember, it's the Bank Nifty weekly expiry, so you will expect that space to remain relatively volatile. But the big story this morning is the MSCI that has added 13 Indian stocks to its global standard index under quarterly review for May. With these changes, it's set to come into effect from the 31st of May and will, of course, draw in about $2 billion of inflow. Mika is joining in with more on that. Mika, firstly, break this down. First, tell us what stocks are getting added, what are getting excluded, and what will it mean for these stocks that are getting added?
Yes, so the changes will come into effect from May 31st before markets close. Now, when you talk about the MSCI's emerging market index, additions under the large cap segment includes JSW Energy, Canara Bank and Indus Towers. They've added Mankind Pharma, Bosch, NHPC, Solar Industries India, Torrent Power, Thermax, Jindal Stainless, as well as Sundaram Finance to their mid cap segment under the emerging market index. And they've updated Phoenix Mills and PB Fintech from the small to mid cap index. When you talk about about the removals, Berger Paints has been removed from the emerging market index, and they've downgraded Indraprastha Gas as well as 197 Communication, which is Paytm, from the mid-cap to small-cap index. Now, they also have added some additions in the domestic indices. Now, Indus Towers, Mankind Pharma, NHPC, Solar Industries India, Torrent Power, NMDC, and Sundaram Finance, while they have removed Berger Paints, Indraprastha Gas, Paytm, Jubilant Foodworks. And when you talk about the weightage in these domestic indices, the weights of ITC and Zomato as well as Vedanta have been increased. And lastly, when you talk about the emerging market small cap index, counters like HUDCO, Indraprastha Gas, Waaree Renewables Technologies, and Paytm have been added. And lastly, in the domestic small cap index, they've deleted Oil India from the index, but they've added Tata Tech, HUDCO, Jubilant Foodworks, Bandhan Bank, as well as the Waaree Renewables.
All right, thank you for that, Mihika there, talking about the MSCI rejig. That's one big factor today as well. But what else is going to be moving the markets? Mayuresh Joshi, Head of Research at MarketSmith India, joins us today. Mayuresh, very good morning. Of course, the big ask is whether the momentum that we saw pick up yesterday continues. And do you think that the numbers that we're seeing today are going to boost that? Let's start with your take on a Bharti Airtel.
Morning, Tamannna. I think the domestic inflows have kept the markets afloat to a large extent. And the kind of hit that the markets took for a variety of reasons, including what might be a probable outcome of the election result, sub-week result as far as a few large caps were concerned, and consistent FIS selling. I think a combination of all these factors definitely pulled the market down. But I think domestic liquidity and sentiments improving again is something that has pulled the markets up. So I think a lot of volatility will be expected for the markets as a whole. For Bharti in general, I think the numbers have been pretty decent. Yes, in terms of expectations, as far as margins are concerned, a tad bit of a miss there. Again, I think the bottom line hit because of a one-time effect that has happened because of its Nigerian operations. But a large part of the market is of the belief that ARPUs will get increased quite substantially in the next few quarters. And as that happens, it creates a substantial positive impact in terms of the earnings sensitivity over the next couple of years. Having said that, even from a leverage perspective, both standalone and the African operations, the net debt to EBITDA has come down on the standalone basis 3.35 times, even on the African operations part at 1.1 times. So I think there are a combination of factors that are still at play for Bharti Airtel and the telecom sector as a whole, which should keep earnings afloat. And because a large part of their capex has got front-loaded, specifically in terms of their 5G ecosystem, as the ARPU increases start happening, I think it strengthens the balance sheet even more. So at MarketSmith India, I think our belief is that the PSRS rating is decent, and therefore anybody holding should continue.
Just one follow-up on that, Mayuresh. And today, brokerages are, quite bullish, I would say, on a Bharti Airtel because they're discounting whatever currency losses in the Africa business, etc. But the bet is on ARPUs increasing post-elections. Now, my question is this a given? Or is this a bit of a risk to expect that ARPUs will decisively increase?
I think ARPUs will increase whether we like it or not. We'll have to shell out more for our mobile and bills and data consumption. If you probably look at how India is stacked at this juncture, we are one of the lowest, I think, one of the bottom 5 countries where data consumption and data pricing is at an all-time low. The kind of data consumption that is increasing every passing day across the length and breadth of this country, I think even a marginal increase in ARPUs and a gradual increase thereof over the next few months and quarters is a given in my opinion. So I think there are no two ways about it whether ARPUs will increase or not. It will increase. I think it's just about the timing on when this will happen.
Right.
Okay. Mayuresh, good morning. Just looking at the set of stocks which have delivered good numbers, you can't take away our eyes from the fact that Shree Cement has come out all guns blazing in terms of both the EBITDA per ton performance that they have done, and as a result of that operational beat, what they've done on the bottom line as well. Somehow this manages to do well every single time people kind of think of writing it off. What do you do with a Shree Cement, which is not cheap but has done so well? Or is there any other cement stock which might be better than Shree in the current valuation picture?
Yeah, morning, Niraj. So decent set of numbers, no two ways about it. Now, if you go through a lot of results that cement companies have posted for the quarter that has gone by, have a look in terms of what Ultratech did, what ACC did, what JK Cement did, and what Shree has done. I think a large part of the market and the belief is that the demand dynamics will grow at a pace of 6 to 8%, which is a tad bit on the lower side, in my opinion, because cement demand has to grow at 1.5 times of GDP, and if you assume India to clock around 7 to 8% in terms of GDP consistently over the next couple of years, I think the volume growth should be close to 10%. So I think that should gradually increase in terms of demand dynamics. As far as the supply dynamics are concerned, capacities are getting added on, Niraj, for the industry as a whole. But generally, I think it's not in that proportion as one believed a couple of years back. So to that extent, I think capacity utilization for the industry will go higher. Shree, in terms of operational performance, yes, I think it has been a good show. But generally, I think our belief has been valuations one and where the placement of the stock is from a price perspective. We still believe that stocks like JK Cement, as an example, still might fare better over the next few quarters. Numbers have been decent. Our expectations in terms of contributions of both white and grey cement should continue doing well. They're increasing capacities, both grinding and clinker capacities over the next few months and quarters, which should incrementally add to the volumes going forward as well. And therefore, I think from a consistency basis, JK Cement from the mid-cap pack, from the large cap names, something on your watch list, ACC, in our opinion, has given a very decent set of numbers. Again, the dynamics are clearly pointing out that volume-led growth should continue, and the consumption patterns across the geographical presence that ACC has, input costs, even if they go up, an absolute and reported EBITDA per ton should remain consistent, as well as the performance in terms of how leverage is getting played out on the balance sheet as well. So a decent performance by Shree, but again, I think it's not something that is fulfilling our criteria. I think JK Cement ACC is something that will continue to be on our watch list.
Okay. Well, Mayur, stay on. Soni Patnaik, AVP at JM Financial Services, also joins in. Soni, I'm trying to understand there are a lot of stocks. Good morning, of course, there are a lot of stocks that might react today. Before we get into conversations about specific stocks from our end, what is it that forms a part of your list in terms of stocks today?
Hi, good morning, Niraj. Thank you for having me on the show. So the first pick would be in Wipro. There's a conditional buy in Wipro, of course. We've seen it bouncing back from good support of 440, 445. So the condition is that if it's able to cross 460 level today, you can buy only above those levels, keeping a stop loss of 445 and a target of 480, 485. The second pick would be in Ashok Leyland. So Ashok Leyland has given a good option chain breakout above 200 levels. It has seen good long build-up positions yesterday. So Ashok Leyland looks quite positive to test higher levels of 220, 225 from current levels and keeping a stop loss of 198.
Okay, a conditional buy on Wipro, and IT isn't in the thick of things, so interesting one. And Ashok Leyland is the other one that from Sony. Sony, stay on. Interesting choices. We'll talk about these and more. Mayur, stay on as well. We'll take a very quick break. Come back with the pre-open session.
back. You're watching Indian Market Open. We're setting ourselves up for a pretty pleasant morning of trade. The bulls largely will be in control, at least in terms of market open. Lots of stocks and sectors to track. One space that has been catching everyone's attention now has been, or rather has been for a while now, has been the defense stocks. Sony, you want to come in on defense stocks? HAL up 5% yesterday, BDL up 7%. Shipyard companies, Cochin Shipyard, Mazgaon Dogs, Garden Reach. I know I asked you this last week as well, but every time we talk, the stocks have a 10% gain behind them. Going ahead, they still look good, and if you had to buy any of these counters, which one would it be this morning?
Samina, we think, HAL can still perform from current levels. It has given a very strong breakout on daily charts. There's a good option chain breakout as well. And you can see it from current levels, 3960 holds to be a very good support. So maybe any intraday dip towards 4050, 4030 zones can be a good zone to reinitiate longs, keep a stop loss of 3960, and the stock can test higher levels of 4200. This could be a positional play, but I think this stock has a lot of momentum and strength left still, and it can test higher levels of 4200 mostly in the near term.
Niraj, gearing up a pre-open trade, but very quickly, are you sticking with this euphoria across defense stocks? They've ran up substantially, but I mean, everyone says it and believes it now that it's a multi-year story we are looking at. If you're to buy into defense, would you do so right now? And if you would, what would you buy?
No, so the structural part of the story, Samina, continues for the defense pack. Strong order books, they've got good revenue visibility over the next few years. The orders are coming at decent margins as well. They've been executing well so far. That is getting reflected in every passing quarter's numbers. So the expectation largely is that they should be sufficiently equipped to probably deliver a decent set of numbers. And even if the earnings base becomes higher every passing year, I think execution is something which is going to be a key here. So I think how they're able to execute over the next few quarters and whether there are no blips in terms of that criteria itself is going to be extremely critical for these defense stories. The momentum might very well continue, but our take is that it has moved up sharply. Every correction that probably comes, I think it gets bought into even more. So to that extent, yes, the rally probably continues within this pack. But I think we will wait for declines to probably come through. I think a few of these shipbuilders, something like
would you wait for a significant 10, 15, 20% decline on these stocks before you go out and buy them? Because it's tough to explain. Like you said, right? Every small decline gets bought into. So you might be waiting on the sidelines for a very long time in that case. Okay, we've lost Mayuresh. But talking about defense, the stocks have actually opened quite well again this morning. Mayuresh, what I want to understand is while you will wait for a decline to pick up these stocks, you agreed with me that every small decline gets bought into. At what percentage, at what price would they look attractive to you? A 10, 20% cut from current levels could be a good entry point, you think? Because you could be waiting for a few months and the correction may not just come in. A substantial correction may not come in.
That's the issue, right? And therefore, I think, you'll have to wait for that dip, as you pointed out. So it really depends on Cochin or Mazgaon. You need to wait for that dip to come through. Otherwise, there are other stories in the market, I think, which will still keep on doing well.
Just quickly want to pull up Bharti Airtel in the pre-open session, and we talked about it briefly. Numbers did see a cut, but because of one-time expenses, etc., brokerages were fairly positive, but the stock tumultuous in morning trade, about 2.5% down. Sony, just wanted to know if you have a take on Bharti Airtel.
I think we'll have to wait and see how the stock is opening today. However, 1200 is a good support. If it's able to defend those levels on any sort of a gap down opening seen in the stock, then perhaps it can bounce back from those support of 1200 again towards 1250, 1260, so those levels. I think it's important just to wait. On the upper side, there's a lot of resistance between 1310, 1320. It has to cross these resistances to see any sort of upside towards 1350.
Just, quickly pull up Siemens. We're going to have Harsh speak on some of those brokerages, but Siemens, looking interesting after those numbers coming in. I don't know if those the right rates. But Siemens is another one that is on the radar. Now, Harsh, with a clutch of brokerage notes this morning, Harsh, what are you talking about?
Well, first off, let me take a cue from where you stopped. Jefferies on Siemens, they've hiked their target price not by a wee bit, but by quite a margin, nearly 50%. So they've increased it from almost 5,600 rupees to 8,000 rupees, the target price. Three key levers that they talk about as part of the note. One, capex is 50% higher than in the last 7 years. Where's the capex going? 333 crore in the smart infra business, 186 crore in the train manufacturing business. That's just announced in Q4. Outside of that, of course, more capex. Second lever is the clean demerger of the power division. This, they believe, Jefferies believes, has potential to create additional value going forward. Also, the third lever is with regard to operating leverage. Now, this is an interesting one. Transmission orders worth 50,000 odd crore awarded in the last 12 months overall industry-wide versus the 10,000 crore number in calendar year 2022. So what we're therefore seeing is a larger opportunity. Here in the T&D facilities business, Siemens has a reported utilization of 60%, and therefore as that ramps up, there is operating leverage linked upside, which is fairly high according to Jefferies. Of course, the large order pickup post-elections could also be the other trigger. 35% EPS CAGR is what they're expecting going forward, and a 20% plus ROE is what they're expecting also as some of the key triggers going forward. So keep your eye out on Siemens. Of course, stock down 4.5% pre-market, but nonetheless. Quickly moving on, UBS on the Indian chemical space. Again, very interesting note coming in. They expect a modest recovery in the chemical cycle, both in terms of value and volume. They're also expecting the Indian chemical sector, which is relatively small but could increase market share on a global basis. They've initiated buy. PI Industries, 31% upside from here is what they are seeing. 4,800 being the target price. Navin Fluorine, 4,250 being the target price. 28% upside is what they are seeing from here. So a couple of those stocks on the Indian chemical space will be in focus on the back of this note.
Yep, Naveen and PI is a buy. Harsh, thanks for that. A couple of sell calls as well out there. I think Gujarat Fluoro is a sell call for them. So Naveen is an up, and it's up about 2.5%. Gujarat Fluoro about 1.5% lower in trade. Speaking of chemicals, RKN Chemicals is the other one which had a pretty horrible set of numbers. The pre-open rates now starting to settle in. About a couple of minutes left, and RKN down about 7% as well. Mayuresh, a lot of promise around this bromine story. Let's talk about RKN for a moment, and or maybe some of the others too. I mean, as one of the brokerages is highlighting that maybe there is upsides for agrochem like PI. But first RKN, if you will, with a set of numbers that they've delivered, what happens next?
I think we'll have to wait it out, Niraj, because if you probably look at the construct for chemical companies, including RKN, I think the numbers are not shaping up, and the expectation largely is that it will still continue to struggle. Some element of base recovery might start happening in the second half of this financial year. The entire problem in terms of destocking that was taking place, pricing in terms of what China was probably dumping into the market, and demand coming off even in the specialty niche space, that has clearly impacted both top line margins and bottom line for most players within the space itself. So as I track most players, as I was reading through a lot of transcripts within the space, I think a genuine recovery is only expected in the second half. Q1 might also be equally dull for a lot of these chemical players. And therefore, I think as a space, valuations are looking attractive at this juncture. But will earnings rebound? I think that is the prime question. That probably might happen in the second half. You'll probably have to wait out before taking entry in chemical stocks.
Okay. So that's on RKN, and remember some of the others have done okay. But as the pre-open rates settle down, amongst the top gainers is Siemens, 5.5% higher. There is also Oberoi Realty, which is up about 4.3%. Shree Cement notches in another 3% kind of a gain, so that's doing okay. Navin Fluorine on the back of that report. And Cipla seems that the sale might have been digested swiftly because the stock is actually up 2.7%. So down about 4% yesterday, up about a couple of percentage points. So 4 or 5 high flyers. Sony, this is the NSE 500 list that I'm talking about. 3 or 4 stocks starting off really well. Anything from this list that you may have looked up on the charts or on the derivative side? A Siemens, an Oberoi, or a Shree Cement for that matter?
I think Siemens is the one that was also on my radar. We can see yesterday it had given a very good breakout. It even closed above the breakout range. It was above 64, 60. I think that stock is still going to hold importance for the day. You can see it heading higher towards 67.20, 67.50 for the day can be seen. And of course, if somebody had already bought it on yesterday's level, then just trail the stop loss to 64.60, 64.80 for the day, and can just hold the stock for higher levels of 67.50.
That's the word. Siemens looking like it's going to have a pretty fun day of trade, 5.5%. I pull up Tata Motors and let's see if it's actually trying to recover this morning. Yesterday, the stock ended marginally higher. It's a marginal uptick on Tata Motors. A whole bunch of other stocks reported numbers. So PVR and Indus that got added to the MSCI. These are counters that may see a little bit of a reaction of sorts. PVR on back on numbers is lower. Oberoi Realty, good numbers. Shree Cement, fantastic numbers. Indus was not doing too much. Oberoi is up 4.5%. Shree Cement is also up 3%. Siemens is looking good. Bharti Airtel is trading largely flat. Colgate Palmolive talked about a recovering demand in the rural sector, is trading flat to slightly higher. Sony, would you think Tata Motors may stage a recovery today? A technical bounce back is expected. It's gradually trying to claw back, but is there a trade in there?
I think, one can just wait in Tata Motors. Even if there's a recovery from current levels, it will face resistance around 990, 995 for the day. It will be difficult for it to cross the level of 1,000 on a broader outlook if we look at. So I think it's just better to wait. And, you can accumulate at this level for a positional play. If there's any dip of another 2 to 3%, can accumulate it then also. As long as the 900 level is just holding intact, you can, accumulate in these levels. But for the intraday basis, it may not work. You can keep it for a positional play. Once it's able to cross the 1,000 resistance, you can see it heading again, retesting higher levels of 1,050, 1,100 levels.
Niraj, what about you? Would you consider buying Tata Motors? Is this an opportunity, or it's got some more weakness to go before it becomes or appears on your buy list rather?
So again, I think if the weakness comes through, I think it will be a welcome move. Again, largely second half recovery is expected to come through. The management seems quite optimistic about the same. A lot of launches expected from the JLR suite, and as a few key markets like Europe, North America and China are expected to improve or show signs of initial recovery as well, specifically the Chinese and the European markets, and the launches of the new variants that JLR is expected to produce on the EV platforms. I think that can be a good base building exercise. Indian domestic operations doing well, specifically on the PV side. CV side should recover again by the second half, hopefully with good monsoons and private capex coming back. And therefore, I think consolidated numbers should hold up. So yeah, a dip would be a welcome move for Tata Motors.
Right, Tata Motors 0.7% gains is what we have. Archean is taking it to the chin. The stock is down 7%. The numbers were disappointing, very disappointing. Like we said, bromine. Actually, you know what, Niraj, come on this one. Do you track Archean? Valuations are compelling. Bromine prices have corrected significantly all over the world in this quarter. But it's a business that, fundamentally from a more of a long-term investor perspective may not be a bad play. Do you agree, or do you believe that because bromine is so commoditized, Archean doesn't have much of a story going for itself here?
Well, that's what I exactly mentioned, right? So I think commodity players are going to see pricing pressures even in the next couple of quarters, to say the least. On top of that, how does demand come back? I think demand will also come back slowly and steadily, which means that a base case scenario for numbers stacking up will be in the second half. On top of that, if you probably assume a lot more that is happening within the space itself, my own sense is that a genuine earnings recovery is still going to take time, generally for the space, including Archean as well. So to that extent, I think you'll have to wait and watch. Valuations might be compelling at some point of time after the correction, but an earnings recovery will also be back-ended to that extent.
All right, Sony, quick last calls before market opens, just a couple of minutes to go. And especially what you would do with a Cipla today, a Siemens today. These seem to be two buzzing stocks, and anything else on your radar?
So in Cipla, I would still wait because I think there's a resistance coming up. 1410 is a good resistance. It may be difficult for it to cross. Only if it's able to cross 1410, I can look for it on an intraday basis where it can retest 1440 on a higher side for the day. I think that will be an interesting stock to watch. Siemens, of course, it's opening quite high, at 7,000 level. It'll also be on a wait and watch list because, it's opening above the 7,000 resistance. But if it's not able to sustain above these, and there could be some profit booking taken towards 6,900 level. So I think it'll be a good opportunity to just re-add on the dips. However, both these stocks would be on a wait and watch list just for the day.
Wait and watch list for the day. Okay. Sony, actually 15 seconds. Your top call, just the name. Top call for the day.
It'll be Power Grid. So I think that will be an interesting stock to watch out for. It can test 320, 325 levels.
Okay, Power Grid is the top call. Stay on Sony. We'll just take in opening thoughts post-market open, but watch out for Power Grid. That's Sony Patnaik's top call. And here's how the markets are starting off this Wednesday morning after 2 days of gains. Are we building on from there, and how strongly are we? Well, starting off modest, about 0.25%. Yesterday, banks were underperforming the benchmarks. Let's see what they're doing today. Yes, still a bout of underperformance, if you will. Very, very flat for the banking space. Mid caps about 0.25%. Small caps had a big solid move yesterday, starting off positively, not bad, even as the index flattens out. Well, let's get the heat map up on the screen and show you what's moving and what's not. So, not too many losers. Let's start with the gainers. Cipla, the sale digested well, and yesterday was the top loser. Today, the top gainer, 3.36. Aside of that, fairly muted. Bharti Airtel, about 0.5% or thereabouts. Some PSUs like BPCL, Coal India, and ONGC in the fray. There is Power Grid, which is Sony's top call, about 0.5% in the green. Grasim shows some bit of spunk, but more green than red. But that's about it. There isn't too much to talk about. Yes, now Bharti is building up and about 1.5% now. So that PAT miss not being punished because people realize there are some one-offs out there to the Naira valuation. But because the subscriber addition in Bharti was very strong, and because some brokerages have raised the target, maybe the street is pleased. Remember, Jefferies has raised the target to about 1,500. So Cipla and Bharti on the gainers list. HDFC Bank dragging the index lower, which is, I think HDFC Bank is possibly the reason why the index is actually very, very flat in this session. Tamannna.
So it is a flat day overall. I wouldn't say great negative cues, but no massive positive cues either, if you want to look at it that way. Let's just pull up what the mid-cap and the small-cap indices are doing this morning. And no great shakes, 0.5% up on the mid-cap, 150. We'll take a look at the small-cap index, also about 0.5% up. A lot of movers, though, and Siemens is one stock that we should pull up. All-round positive reviews on their numbers. Their numbers have looked good. Their order inflows have been a bit of a question mark just for this quarter, but it's a deferred kind of a scenario. So there's a buy call from Jefferies as well. That stock very, very sharply up this morning, 8.5%. So Siemens is having a second consecutive good day. It had the ABB impact on it, but having a good day today as well. Oberoi Realty, Shree Cement, I would put them in the category of those with good numbers. Oberoi Realty about 2.5% up, so okay, decent gains on the back of numbers. Shree Cement was the other one which had really good numbers, but the gains have been muted, at least in the first few minutes of trade. Indus Towers is one that we should look at. It's the MSCI sort of upgrade would help. And that stock is about 2% up. But Indus Towers has also been having a good time. In terms of poor results and its impact, we should look at Archean, we should look at Apollo. Both of them perhaps, not really being welcomed by the street. Apollo is okay, but we should look at Archean Chemicals because that's the big hit. Down, I mean, at least it's better than what its first sort of numbers were hitting, but still about 4.5% down, being beaten down by the street today. Just PVR and Radico, just on the back of results, is the last two that I would pull up and see how they're doing. Very muted for PVR, Inox, not great numbers. Radico Khaitan was decent, so about 2% up. So it's mostly about the numbers. A few of those stocks really showing major gains on either side, but otherwise a largely muted day, I would say, Samina. Not negative, but not too positive either.
Absolutely surprising is Thermax. It didn't make it to the MSCI index. It's got a downgrade again this morning from Nuvama, but the stock is up 12%. It's your top gainer on the Nifty 500, looking absolutely well placed, and the buying is not receding yet. 527 on added to Thermax, 5,173 is what the stock trades at. 11% gain is what we have. Fertilizers has been a theme on and off when it's about election play. So if it's not railways and defense, then it's fertilizers. And that's pretty much been a pretty easy trade, to say the least. All your fertilizer stocks, including FACT, are trading higher. No runaway gains, but FACT itself is up 5%. And along with that, some of the other names are not looking too bad either. On back of the MSCI reject, PB FinTech is seeing a good move. It's up 5% as we see it. So that inclusion is actually helping the counter do well in trade this morning. Take a look at Indus Towers, Mankind Pharma, NHPC, Solar Industries, Torrent Power. These are some of the names that have been added to the MSCI index, all trading slightly higher. May not be a runaway rally, nevertheless the counters are trading with a positive bias. On the exclusion side, you've had Berger Paints, Indraprastha Gas and 197 Communication. Those counters reacting negatively to that news point. IGL down marginally, Berger Paints also trading lower. JSW Energy is having a pretty solid start this morning on back of the addition to the emerging market index. It's up 5% as we see it. So that's JSW Energy for you. Good run there in terms of trade. Oberoi Realty reported solid numbers, and you're seeing a reflection of that in the stock performance. BSE, after days of underperformance, the stock number has been on the sell side for quite some time now. This morning, seeing finally a recovery coming into 2.5% on it. Palmer Lowry is also doing well. VMart, look at that move on VMart, say 5.5% high. We'll connect with the management soon. They've reported numbers as well. The stock reacting well to that. Repco Home Finance is also up 6%. Cipla is up 3.5%. So all in all, fertilizers looking good. Adani Group stocks are having a pleasant morning. You've got Thermax that I'm still trying to figure out why it's on a roll this morning. You have something on Thermax?
Maybe a block, Samina, that seems to be, I'm just trying to look at the volume numbers because there is apparently no other reason. The results came out 2 days back and there is nothing out there.
The results came out, they were not included in the MSCI.
And there's no big brokerage note today.
There is a sell call, if that helps you up.
So it has to be a block, very likely. Just I think,
we'll try and see what happens.
We are trying to check that. But the interesting piece today, guys, just one quick thing is that almost everything which has delivered numbers is reacting to those dually. Siemens, VMart, Shree Cement, Repco, Bharti Airtel, very strong moves into all of those. Oberoi, which have given that result piece.
Also, just quickly, PVR, those numbers were not very good. But if you can get PVR Inox on the screen, not such a bad hit, 1.5%. But I think the story of the morning is Thermax. We will figure out what's going on very shortly on this. But for now, it's on a roll. You want to, Sony, comment on this one? Nifty's opened up. Any trade that you're spotting? The breadth is pretty good. It's looking healthy, if I may use that word for now at least. Do you have a Nifty call or a trade call? Any stock specific trade that you've identified in the last 5 minutes or so?
I think, Samina, if it comes to the indices for Nifty, it's better to wait until the 22,300 spot level crosses. Only above that, you can see some short covering towards 22,500, 22,600 level. It's going to face some resistance. It will not be easy for Nifty to just cross the resistance today. Similarly, for Bank Nifty, 48,100 is a good resistance for the day. Expect short covering only above that level. You can see 48,600 also coming in. But then it's not going to be very easy for the indices to cross the resistances. So maybe the weekly expiry can help. If we talk about a stock specific, then NTPC is looking quite strong for the day. Intraday, it has given a good breakout. There was a consolidation for the past 5 days. Today is the day it has broken out of that consolidation zone of above 358. So I think keeping a stop loss of 358 for the day, you can buy NTPC, and there's a target of 370. So it's an intraday call.
So that's the intraday call. Just one last take from Mayuresh on what is going to be the big play. And Mayuresh, Thermax and Siemens, do you think that there is a slightly longer term sort of story here?
There is, Tamannna, and again I think domestic cyclicals will continue doing well. The expectation largely that is getting built around the order book itself, that is expected to grow at a very decent pace. There are multiple schemes that the government is still embarking upon. Obviously, you've seen the outlay towards the entire Gati Yojana, but even Nal Se Jal as an example, the roads allocation, the highways allocation, and expectations of private capex coming back. I think that's going to be a huge incremental factor going forward. So I think this theme expected to continue doing well. Obviously, if you're holding out on stocks, continue holding. I think what we like specifically from this space are stocks like a Wellspun Corp or a Jindal Saw as an example, because they do become ancillary and auxiliary plays in terms of this entire capital good infra story. Order books are decent, they are executing well. It is getting reflected in the financial performance, and the management sounds very, very optimistic in terms of continuing their strong earnings growth, reflected by our EPS and RS rating and the institution holding, which we call air canceller. So yeah, space looks interesting. Wellcorp, Jindal Saw are our top picks.
Thank you for that, Mayuresh. Great to speak with you today. Sony, great to have you on the show, as always. That is really the take today as far as the first set of opening cues are concerned. Niraj Shah, Managing Director at HDFC Securities, now joins us on the show as our special guest as we do our election trade sort of run-up. But this is a segment that we're doing all week today in an important week sandwiched between two key polls. Niraj, great to speak with you. Now, it seems like in the last 24 hours, the market may have shrugged off some of those concerns as far as the election outcome is concerned, as those jitters are concerned. Would that be a fair assessment?
Good morning, Tamannna. Thank you for having me. I think I would say that this is a fair assessment, but I am not unnecessarily perturbed with the volatility we are seeing during the election times. This was, in any case, on the anvil and expected. In fact, I was looking at the data of VIX data for the 2014 and 2019. Actually, VIX went up to 28.8 and 37.7 also in these election times. So we went only up to, I think this time in these elections, 2024, to about just 21.48. So yes, it was expected. And when when you are sitting on profit, some people would like to do the profit booking. Some people will do the bottom fishing. So some kind of a range bound activity was expected. I think what has changed in the last couple of days is probably, the two ministers have assuaged the concerns of the market participants also. Dr. S.S. Jaishankar was there at NSE. I attended that event also, and he could able to allude that how the incumbent government has a high probability of winning, and there'll be a stability and continuity in the policies. I think the same thing was alluded by our Honorable Finance Minister Nirmala Sitharaman at BSE event also. So I think some of these things assuage the concerns of the market participants. But overall, I think the claims and counterclaims of various political parties, experts, and so on will continue, and we will see that some volatility will be there in the market. It is the inherent nature of the market. And these are the times when you witness more volatility.
Is an opportunity is the question, Niraj, because those who are maybe a little perturbed by the kind of volatility we've been seeing would be wondering if this is an opportunity to come in, stay on the sidelines, and then what exactly do you bet on?
I think India is an absolute sweet spot. Elections will come and go. I'm not undermining the importance of a mega event, once in a 5-year event. But let me tell you, when we will talk again in June post-elections, it'll all be done with, and we will have a stable government, and we'll move forward. We'll be discussing the other issues and not elections anymore. So my take is that, these are good levels to enter in the market when you get some correction, some kind of a froth going away from the mid caps and small caps. And particularly in the select counters where the results have been good, this is an opportune time for us to get into the market. And we've been recommending all our investors to invest in a staggered fashion. Actually, Tamannna, there is no one-size-fits solution for all investors. Those who are existing investors, they are already fully invested or largely invested in the market. I think there is no need to panic. There is no need to have any knee-jerk reactions. Let the volatility come and go. And at best, what they can do is they can rebalance their portfolio. Some of their preferred stocks where they could participate and they have been feeling FOMO, probably they can reallocate some funds there. Those who haven't invested, those who have been fence sitters in the market, I think it's a good time for them to start investing in the market, irrespective of the volatility, in a staggered fashion.
Niraj, hi, it's also Samina joining in. Do you think FY25 could be a volatile year for the markets, or do you think on the flip, double-digit gains are still possible? And also, any risk or chances of a black swan event in FY25, not locally, but global in nature?
So let me answer the second part of your question first. I think what are the key risks we are carrying? I think the biggest elephant in the room is not elections, but the stubborn inflation and high interest rates. And we are witnessing that time and again, the commentaries are coming from the central banker, whether it is Fed or Reserve Bank of India, that rate cuts are getting postponed and pushed forward. So that is one of the big risks that we carry in the market. And our take is that it will get pushed to the last quarter or even to the first quarter of the next calendar year also. So that is one big risk. Of course, I can't undermine the importance of geopolitical risks that we are carrying because of all geopolitical tensions that are going on. However, crude have eased a little bit. So to that extent, that got assuaged. But these are the risks I see. And in domestic market, the black swan event could be like what we have witnessed in the 2004. Let me take you, 20 years back. I was looking at the data and I realized that on 17th May 2004, BSE corrected 15.5% on a single day because of the different than the expected outcome in the election. So that if we get something like that, the probability is less on our assessment at the ground level. But if we have event like that, then there'll be definitely a knee-jerk reaction in the market.
Niraj, just a very simple, straight-up question. What sectors are you betting on regardless of who forms the next government at the center?
I think the India growth story is hovering around the domestic economy. That's something we will continue. Whichever government will come, they will invest more on the infrastructure side. The defense momentum, you guys covered a good story today morning on defense, will continue. Some of the recovery will happen in the BFSI side because we so far in last 7-8 years we've witnessed only government-led capex, and now only off late we started to see some green shoots in the private sector capex. I think this is a long haul. India have been always a consumption story. Consumption has been a secular theme in India. Whenever we get the capex going, that's when the industrials, that's when we see the BFSI sector doing very well. So that's what we are looking at. I think FMCG has been struggling big time on the volume growth side, though on the margin side they've done better. With the El Nino-led better monsoon on the anvil, I think there could be some upside in the FMCG also, but that too in the later half of the year once we get more visibility on rural demand picking up. IT is one sector that has not performed in the last 1 year or 2 years. I think that's almost bottoming out, and one can start looking at accumulating select names there as well.
Stay on with us. We'll take a very short break and we want to continue this conversation. We want to get your specific calls and picks on the other side. But as we go into the break, you were talking about ministers' comments, and here's what Finance Minister Nirmala Sitharaman said yesterday talking about Indian markets. She was addressing a session at the Bombay Stock Exchange. Listen in.
Earlier, there used to be a poverty index. Earlier, there used to be a human development index. All of them continue. But today, what is keenly watched is the VIX, volatility index of the markets. And therefore, standing in BSC, I want to very clearly lay before you that Prime Minister Modi's third term, one more very good, stable, high governance, good governance, more governance, less government is what we are looking forward to, and we are confident that Prime Minister Modi will be forming his third term where India will become the third largest economy.
Back with India Market Open and in conversation with Niraj Shah, MD at HDFC Securities. Niraj, good morning, Niraj here. We're talking about trying to gauge what is changing in terms of the demand environment or the commentary thereof. There seems to be some change in how people are viewing chemical companies, Spec Chem in particular, but even some of the others, Agrochem the commentary from a couple of them was not too bad. What is it that HDFC Sec is thinking about this particular pocket? Because it's export oriented, has had a fabulous last decade, and has been in hibernation for the last couple of years. Could there be winds of change?
I think chemical sector has been doing well because of the looked at as an opportunity. So that's where, European customers in Western world were looking at Indian companies. So that's where we've seen this doing well. But this is, again, there are a lot of cyclicality in this space. Margins related issues are also there, and then there are concerns also. So I think the story has already played out. Only selective counters have some upside only. Largely the story in the chemicals have played out.
Okay, well, and viewers, just keep in mind, I think the comment that Dheeraj is making is important, and if you just look at what some of the other brokerages are saying, kind of on similar lines as well. At the other end is this whole conversation that has come in after what Colgate has done yesterday, which is that whether there is at the margin some bit of demand recovery in the rural end. Couple of two-wheeler companies have indicated that, Hero in particular, Colgate is indicating that, Pidilite is indicating that. Are you penciling that in, or is it too soon to make that assumption?
See, urban demand have been robust, and we've seen even the unemployment data also going down in the urban. But rural area, still we have huge unemployment also, and the demand hasn't shown enough green shoots. We are still witnessing challenges. If you listen to the HUL commentary, I had a conversation with Rohit Java as well, and Ritesh, who's the CFO. So my take is that we will have to wait for the monsoon to come and see that how the demand picks up. Generally, in the election year, due to enhanced activity at the ground, also there is some pickup in the rural demand, but it's not done and dusted yet that we are seeing a significant green shoots. Also, I think the new government, when they come, what kind of policies they come up with, what kind of plans they have, because any government whoever will come will have to be more inclusive to make India growth story progress from here onwards. See, 6.5%, 7% GDP growth is given. If we need another 50 basis point, another 100 basis point growth to add to that, I think the thrust has to be more on how do we take the rural ecosystem along, and that's where I think there'll be significant measures. Already we have done a great work in terms of connectivity. It's at the last mile, but a lot more work to be done in terms of creating the demand at the rural markets.
Dheeraj, just wanted to get your take on the auto pack. Now, Tata Motors and the response to its result was a little interesting because the numbers on the face of it were good, but the sustainability of those kind of numbers, the CV business, etc., what's happening in passenger vehicles was a question. What is your outlook on the entire auto space and two-wheelers, four-wheelers?
I think we are seeing premiumization in the four-wheeler side clearly. So that's where we are seeing good demand, and I think some of the intermediaries are also doing well who are into probably distribution and not just manufacturing alone. But our numbers are looking good. India is one country where people have huge aspirations. We have seen shift from a sedan to the SUVs, and demand is quite robust. In fact, one of the green shoots, we have seen that the two-wheeler demand has picked up in the rural markets. So that is some indication is there that some pickup has happened in the rural market also. So I think the EV will take some more time to fructify, but in the passenger vehicle space, but in the four-wheeler space. But overall, I think the things are good. More and more new models are also getting launched in the range of 7 lakh to 15 lakh kind of range. That's where we are seeing a significant demand also.
All right. Dheeraj, thank you so much for joining us today, giving us that election trade at a very interesting time. Dheeraj, really there.
Tamannna, if you allow me, I'll tell you a couple of data points on SIP side. I think these are some interesting facts. And last year, April 23, the SIP throughput was just about 13,700 crore. In 1 year's time, we have added 7,000 crore. That's amazing growth, almost 2/3 of a growth in terms of a per month SIPs. That's how we could able to actually counter the significant outflows by foreign portfolio investors. Absolutely. So I think this is something, a very, very good story. My personal take is that from 20,000 to 50,000 journey will be a faster journey. And at present, ticket size is only just about 2,341. Just by doubling the ticket size itself, we can go to the 40,000 kind of a crore inflows coming in from the SIPs. And just to share with you last data point, I think the current outstanding AUM in the SIP itself is 11,20,000 odd crore.
Wow. What is Nifty ending the year at, as per you, Niraj?
I think I see post-elections, other than the knee-jerk reaction, good 10 to 15% upside in the Nifty.
Okay, so it's the faith of the domestic investor is a different level of a paradigm shift. Well put, Dheeraj Halide of HDFC Securities. All right, we're speaking about consumption. Today, Colgate-Palmolive numbers have been good, better than expected. And, they're reiterating a story that we've been hearing over the last a few weeks, especially as results have come in for FMCG companies. Kaustubh Pavaskar, DVP of Fundamental Research at Sharekhan, is joining us for more on that. Kaustubh, first I wanted to start with your assessment of Colgate numbers.
The Colgate numbers were ahead of what we and Street were anticipating for the quarter, largely on the margin front. So EBITDA margins came in better than what we and Street were anticipating, and I think it is the quarter of highest EBITDA margins for the company. Revenue growth of 10%, I think it is the fourth consecutive quarter where we have seen revenue growth consistently above 6-7%. So for last 4 quarters, whatever initiatives the company has taken in terms of relaunch of some of its products, also launching various variants, getting some of the products from the global basket, I think that is helping the company. And the 10% growth, I guess, it is a mix of volume and value for the company during the quarter.
In that case, what is the call on Colgate-Palmolive? Like you said, it's been a pretty decent quarter. They're betting on rural recovery. And is this rural recovery play limited to Colgate, or would other companies in the same space start looking attractive to you right now? And of course, defensive seems to be a little bit of a theme right now in terms of stocks as well.
Colgate, we have a hold rating on the stock. The stock has seen a good run-up in past 6 months. And if this consistency in the performance remain, and if company continues to clock in good volume growth in the quarters ahead, I think that it would be a re-rating kind of a scenario for the Colgate. In terms of the rural recovery, most of the companies in their conference call, post-result conference call, have indicated that they have seen pick-up in rural demand. Some have stated that rural growth was better than the urban growth. And a lot of anticipations are built up post the election because, there are expectations that government might, provide some incentive to the rural economy, and also monsoons are expected to be good. So overall, it will augur well for the rural economy, and it will drive the consumption, which was lagging for past 2 years. So, and it will be one of the key driver for the FMCG companies going ahead. If rural come back on track, and that should drive the volume growth in the quarters ahead for the company.
Next 2 quarters, would it be urban or would it be rural? And depending on that, what is a strong buy call that you currently have in the sector?
If rural is back on track, I think we will see the impact of same from the second half of the year. So if monsoons are good, government provides some incentive in post-election budget, I think the impact of same would start playing in from quarter 2 or Q3 of FY 2025. So and that where we will see the volume growth also improving for most of the consumer goods companies. Second important point is the companies have taken the price cuts, to pass on the benefit of sharp decline in the commodity prices. Now those anniversarization of those price cuts will start coming in from Q1, and we should see volume and value growth to be more or less in line from Q1, Q2 of FY 2025. So slowly we should also expect the revenue growth for the companies to start picking up. Raw material prices have remained stable, so I think there would be another 1 or 2 quarters of margins remaining better for most of the companies under in the FMCG space. So considering all these things, I think our top picks in the space are Godrej Consumer Products, Tata Consumer Products. If rural recovery starts from Q2, Q1, I think companies which didn't perform well in terms of stocks like Dabur India, HUL will start seeing good momentum in terms of valuation if there is a recovery in the rural market, and that flows into their volume growth recovery.
Right. Thanks, Kaustav, for that. Good to get some perspective from you, what you made of those numbers. Rural recovery seems to be on track. Colgate is not looking too bad in trade, and Kaustav has a hold call on the counter. The markets in the meantime as well, holding steady from the way we see it. You have a few stocks that are, of course, looking okay. Counters like Thermax on back of inclusion and anticipation of $154 million of funds flowing into the stock are gaining well. 8% heights off the day's high point, but still looking pretty well placed. Along with that, a couple of earnings reaction across the Nifty 500. On that note, we'll take a break. We'll come back. We'll talk to Electrosteel Casting and get some perspective from the management on the earnings and the guidance for FY25.
All right, we're talking about Electrosteel Castings this morning. They've had a pretty good quarter. Q4 has seen revenues up 7%, but look at their EBITDA and EBITDA margins. EBITDA up 61.5%, margins at 15.5% versus 10.3%, and net profit up 153%. 227 crores versus 89.5 crores. What's the story behind the numbers? Uddhav Kejriwal, whole-time director at Electrosteel Castings, with us today. Mr. Kejriwal, good morning. Thank you for speaking with us here at NDTV Profit. Great to have you on. Can you hear me?
Good morning.
Yeah.
Thank you.
All right,
yes,
there you
very
are.
well.
All right, let's start talking about this quarter and what has worked for you. in Q4, despite the fact that you've seen major renovation and repair work, so your Kharda plant was out of action for a bit, but nevertheless, you've seen quite a strong bottom line here.
Yeah, so during the year, we have sold about 7.5 lakh tons of DI pipes, vis-a-vis 710,000 what we sold last year. So we have registered a volume growth of about 5%. The pricing continues to remain strong thanks from the market excitement. And we have reported a consolidated total income of 7,580 crores, vis-a-vis 7,360 compared to the previous year. So that is a growth of about 3%. Now, what has worked? So coming to what has worked, now our EBITDA margin has grown from 11% of the previous year to about 17% this year. Now, the way we look at it, the main factors that have contributed to this, first of all, would be that we have a strong order book this year. Secondly, we have got decent support from the manner in which the commodity prices have behaved, particularly coking coal, which happens to be the largest contributor to our cost and is an imported raw material, and also from the operational efficiencies. So these would be the three factors I would put down for what has worked for us as far as our EBITDA margins are concerned. And post that, when we're going from EBITDA to the PAT, definitely the reduction in interest cost from 272 crores to 202 crores, that is a 70 crore reduction this year, has definitely made the PAT look nicer.
You've got a pretty ambitious guidance, and I think the market will be getting excited about that. You're expecting margins to improve further to the range of 17 to 18%, Uddhav. Is that correct?
So this year has been an interesting year in many respects. And yeah, we are working hard to do better than what we are doing. But having said that, I think we would like to believe that we would continue to sustain 16 to 17%, because there are too many variables at play in the business that we are. So yes, I think obviously the efforts will always be there to do better on part of the entire team. But yeah, I think for saying purpose, I think I should say that we will be working to sustain 16 to 17%.
Also, what is capacity utilization currently at? And you've got, you want to walk us through what your expansion plans are in FY25? Where do things stand? And also, how would you be funding this? Because I do notice that you've got a long-term debt of about 400 odd crores. Capital requirement, I'm guessing, working capital is about 1,800 odd crores. And you're sitting on healthy cash too. So any plans to retire debt, or is there more expansion on the cards?
I'll just take you through this piece. We have concluded this financial year with about 7.5 lakh tons of pipe. By the end of 24-25, we should be having a production capacity of 900,000 tons. And by the end of 25-26, we'll be with a production capacity of 1 million tons of ductile iron pipe. So this is on the production capacity piece. Now, the capacity utilization part. So keeping in mind the current market scenario, we would have been at 100% capacity utilization even this year, had it not been for our maintenance shutdown that had to be taken up this year. But going forward from this financial year onwards, we don't see any reason why we will not be utilizing 100% of our capacity. And we will be pretty much selling whatever we are producing the way things look right now. So that is on that. Now, coming to the debt part, which you wanted a little bit of elaboration upon, you are very close to the figures that we have a long-term debt of about 500 crores and a short-term of about 1,500 crores. So our total debt stands at about 2,000 crores as of now. And we have a debt equity of about 0.31 as of now. So, yeah, we are looking at funding this entire increase in manufacturing capacity by internal accruals, no doubt. That is the first part. And the second part is that we are hopeful of going ahead and completing our scheduled debt repayments as per plan as well.
Mr. Kejriwal, I just wanted to know about the sustainability of your EBITDA margins. You've had a sharp increase and you put it down to volume growth. I want to understand if 15.5% becomes the new normal. Do you see that sustaining into FY25?
So maybe just a corrigendum. I mentioned that the EBITDA margin growth is a combination of a couple of factors. I did mention that I have I'm getting support from a strong order book. Also, the commodity prices, especially in the international market for my coking coal, and also the operational efficiencies. So now going forward, we have a decent order book in hand. We are sitting on an order book of around 9 to 10 months even today. So the order book factor does not seem to be a matter of concern for this financial year, definitely. And also on the raw material prices, we are very much in the market, very close, with a very close tab on the developments in the international market. And we would like to believe that we do take conscientious calls depending upon the way we see market behavior. And I think definitely for the first quarter, we are well poised with our costs. So keeping all that in mind, I had mentioned that I will be able to sustain an EBITDA margin of 16 to 17%.
All right. Thank you so much, Mr. Kejriwal, for joining us today. A strong quarter for Electrosteel castings, and that was the management talking about how they see those margins also sustaining. In fact, they've guided for higher margins. All right, let's get back to markets and see what's happening there. I would say flat to positive. Nothing great. The Bank Nifty now in slightly negative territory. Both the mainline indices not showing too much action. What's popping? Cipla staying up afloat. The Adani pack also not doing badly today. Adani Enterprises having a second good day, actually. So is Adani Ports, both up about 1.5%. But Cipla is the big story. DRL also jumping into the fray, up about 2%. So those remain the big movers. Maybe a Siemens. Let's just quickly see what Siemens is doing before we move ahead, and whether Siemens is shown that up move continuing. Well, it's come off its highest points, but still about 5% up. The big listings is what we need to look forward to, isn't it, Niraj?
Yeah, and strong subscription, Tamannna. So interesting to see what either of those do in the session today, and how do they list, and more importantly, what happens ahead. So yeah, it's completely right. It's interesting that, like we discussed in the morning, that the listings are thankfully happening for them at a time when the market sentiment seems to be slightly positive, both for TBO Tech and Aadhar Housing Finance.
Yeah, TBO Tech had a 87 times subscription, and the grey market price at least showed a very sort of healthy premium. We'll wait and see if 55% that happens.
As the rate settled down at 945 for TBO Tech.
Yeah.
So at least that kind of an upside, which is quite stunning. But Aadhar would be the other interesting one. I'm sure the
Aadhar wasn't too hot in, I think, in the first sort of numbers which came out. But we'll see. We'll see. Just about 20 seconds over there to go. In terms of what their businesses is, Aadhar Housing Finance backed by IFC, but then also coming into a fairly crowded space. TBO Tech seems to have a slightly differentiating sort of product. They're an intermediary between your platforms and your suppliers of many tourism inputs, so whether it's flights or hotels, etc.
Yeah. So on cue, Tamannna, Aadhar Housing Finance fairly pretty much a damp squib, but TBO in line with what the discovered price was, about 53%. So a strong start to that one. 500 points or 500 rupees on listing gains for TBO Tech. So suffice to say that is good. By the way, Aadhar was 26 times as well. So not
a poorly subscribed
But
you know, in terms of opportunities also, you've seen lesser IPOs in the last few weeks. So at least in 2024 so far, relatively. 2023 and end of 2023 was a shower of IPOs. So in that sense, in the primary market, the fact that you have fewer options may have contributed to those kind of subscription numbers. At least some premium now on Aadhar Housing Finance, not completely a miss for those who may have invested. All right, that's all the time we have on India Market Open. We'll take a very quick break here, but Talking Point comes up on the other side. Stay tuned.
Thanks for tuning into Talking Point. A bit late today, but I'm your host, Niraj Shah, and our guest today. I mean, the case for a chat. Let me first establish the case for a chat and then introduce our guest, just the perfect person to have. The focus today of Talking Point is on healthcare. Is it the right time to invest in healthcare broadly? And we've asked this question to this guest now for 2 years consecutively. Selectively, some of those pockets have turned out very well. Are diagnostics stocks finally starting to see a change in trend? Well, if the recent quarter numbers and the commentary goes by, maybe there is hope. More importantly, is the hope justified in the CDMO players on the back of the commentary again that they have given, and maybe, just maybe, some turn in the R&D spends from the global firms? I think somebody who best equipped to talk about that is Dr. Amit Verma, Managing Partner of Quadria Capital. Dr. Verma, good having you. Thanks for taking the time out. I hope all is well.
Thank you, and it's always a pleasure being on your show.
Thank you, Dr. Verma. Great having you as always. Can I just ask with a broad brush view? It's been about 6 months that we last spoke to you. Have things changed quite dramatically on healthcare, or do you reckon that the investing trend has largely remained the same?
So first, let me start off by saying I need to be honest because you quiz me every 6 months. So I need to be clear that my consistency stays. The trend in healthcare investing continues to be bullish. It is very positive, not just in India, but across the region. I think a lot of it is depending upon the case utilization and the fact that there is a high throughput through all facets of healthcare. And this is a post-COVID phenomenon where I think people have started to realize and focus a lot more on their health. I also see another positive change that the realizations have gone up. And that is again beginning to augur well for our industry.
Most certainly. Sir, the last, or at least before 2023 began, the conversation was about whether there will be pricing pressure in the US markets. I'm starting with the generic players, and then whether it will change. I think we've seen some bit of positivity out there in the last 12 to 18 months. It's shown in the way the business metrics have played out. Maybe one can argue that for the Indian players, there's one generic Revlimid that has been the savior. But even aside of that, the companies have sounded a bit more sanguine. Has it run its course because it's typically a cyclical business? Or do you believe that there is merit in looking at this US generic players market a bit more constructively, even now?
So, Niraj, let me try and answer it beyond Revlimid. I will come back to it for a second. Sure. But I do believe that there is a US pharma macro that is playing out. There are a huge number of drug shortages that are in the US. And most importantly, from an Indian player, we are beginning to see price stabilization. I think that's happening, especially in the small molecule category. So that is enabling a shift that's taking place. And I think also the upcoming patent cliff issues where a lot of the drugs are going to go off patent, especially between FY25 and 28, the macro is coming together to make it positive for most drug manufacturers out of India. I think also when the pricing pressures were taking place and the world wasn't looking as good for Indian pharma played it smarter. So for example, they got out of unprofitable product lines. So all in all, while Revlimid is great for a few players, we think it's going to wane off. But I still continue to stay extremely positive, especially in the small molecule space.
Okay, on the small molecule space. That's part one. Part two, Dr. Verma, is on the CDMO businesses. Now, we've seen commentary from companies which seems to indicate that while the pressure still exists,